Hello again, everyone. And we're back again to talk about the massive tax bill that was just passed in December of 2017, also known as the Tax Cut and Jobs Act. And today, again, this information tax talk that we're going to do today, we're going to concentrate on the provisions in which you can no longer claim a deduction for yourself or your dependents. You used to be able to claim like $4,000 for each person on the tax return. That's the actual taxpayer or your parents, and then they could claim a deduction for the dependents, and that deduction was worth about $4,000. That's no longer going to be the case. One of the provisions that's going to help offset the fact that you will no longer be able to claim that deduction, at least in terms of the children, is if you have a child that's under the age of 17 and has a valid Social Security number, you still have to qualify in all the other aspects of claiming that dependent, which means you have to basically support that child. They have to live with you. You take care of them. No one else supports them. Then you could perhaps qualify for the child tax credit, which has been expanded from $1,000 to $2,000 per child, okay, that you would be able to get. Again, we must remember the child has to be under the age of 17 and have a valid Social Security number. So that's going to help offset. Also, that credit can be refundable if your taxes are such, your tax liability for the year is such that your credits and your withholdings towards your tax liability exceeds the amount of your liability, then that credit can be refundable up to $1,400 per child. So again, the credit has been expanded from $1,000 to $2,000. Also, as part of the provision, the number of folks that will be on the number of taxpayers, or us, that will be qualified to, eligible, I should say, to take that credit has expanded to anyone making, say if you were single, up to $200,000 and you have the qualifying child, okay, under the age of 17 that you take care of, you can get the $2,000 credit if you make up to $200,000. If you make over that, it's prorated to the point that if you make a certain amount of money over that, you won't get it. You'll phase out, just like it used to be. But the numbers were very low back in the day. I think it was, prior law, I shouldn't say back in the day, but prior to this tax act being passed, if you were single and made over $75,000, then you were no longer able to claim as much of the credit. It would be reduced, and if you made over $110,000 as a couple, you wouldn't be able to take the full $1,000 credit. But again, please keep in mind that's single up to $200,000. You can get the $2,000 tax credit for the qualifying children, and $400,000 for a couple that has the children that meet the criteria under the age of 17, up to $2,000, $1,400 of which can be refundable. Okay? Now, also, what we want to keep in mind here with the loss of the dependency exemption, okay, for your children, that if you have dependents that would actually turn 17 during the tax year, then you won't get the $2,000 credit, the child tax credit for that child any longer. But there is a new credit that they've added, which is called the other dependent credit, which is, they refer to it as ODC. Okay, so that's, again, you qualify, you meet all the criteria as far as you support the person, that particular dependent, whether it's a relative, parent, child, or whoever. But if they're not under the age of 17, then of course you can get this $500 tax credit for that particular dependent. So that's to help you offset the fact that you can no longer claim those exemptions. Now, this is where it can get a little bit complicated, and you would need to perhaps sit down and have a chat with someone like myself or a tax professional, or even your particular tax professional, because again, you've lost the ability to deduct that $4,000 even for yourself as an individual or as a couple, say a husband and wife. You can't claim that. So you're going to need to do some tax planning to see, how am I going to offset this fact that I'm not going to be able to say, let's say in a case of a husband and wife, that's an additional $8,000 in deductions that you won't have. And we're not going to get into it today, because we really want to concentrate on the fact that the exemption deduction is going away. But the standard deduction, there is some offset there, where the standard deductions have been increased greatly to try to help offset the fact that you won't be able to claim that exemption claim that deduction for the exemption for yourself as well. But we're not going to get into that today as much. We really want to concentrate on, as I said. So the takeaway today for this particular informational tax talk is the fact that the credit has been expanded so that more people can claim it. It's $2,000, and for those children that are under the age of 17, you can get that $2,000. And for those that are greater than or 17 or more older, then you'll get the $500. So again, if you need additional information, you can contact us. Please reach out to us at Maurice_W@msn.com. We can provide you with additional information or seek tax advice from a tax professional or your own tax advisor. So again, I know that's in a nutshell, pretty quick, but again, this is for informational tax purposes so that you don't wait till it's too late to do your tax planning. This law will affect everyone that files a tax return. So again, stay tuned. It's going to be a pretty steady dose of this over the years because this law is massive. Right now, we're at a continuing education seminar, and we're getting additional information as well on this particular law. And so stay tuned, and we'll talk to you soon. Take care.